Hello, my friends. How are we today on this gorgeous Monday, Manic Monday, March the 10th of 2025? And this is great. This is just beautiful. Absolutely beautiful. Dollar General. Dollar General, it was, brought to my attention about over a couple months ago when it had this big pull down from $250 down to like $70, okay? And I said, wow, it's so deep, the pullback. But, we were talking about in that video, I was just mentioning how, okay, it has really piqued my interest because, all it was doing was just revisiting this old friend over here. And we had made a bunch of scribbles and thought about that and said, this is of good value, Anything under, $85 is of great value. And we were talking about it and see how it had this little, the past, let's say here, I would venture to say the past 16 weeks or so, we've just been consolidating between 80 and 64. Okay, and now looky here, the past 2 weeks we've been going straight up. So what's the daily look like? Whoa! So on the daily, we've broken out of that $70 area. And as of this morning, we made a new high, 85. You got Thursday, Friday, markets close over the weekend, and then Monday, here we are. We're still pushing up. So we're going to go ahead and delete all this because we've already discussed our earlier ideas. But this is what I'm saying. Like, you had this painful moment, okay, of everybody was buying the top up here, 180, 200, 220, 250. Okay, that's fine. You were buying Dollar General of the belief of it to go higher. But when it started breaking down, and then it pulled up slightly, and then it broke down even lower, okay, and you're sitting down here at $70, I'm sure a lot of investors in Dollar General, they were like, now my average price was $180 and now it's $70. Oh, I'm just going to sell it off. I'm just going to sell it off at a loss. And that's kind of the name of the game in the markets, is they want you to sell at a low and buy at a high. So don't be mad at yourself because you're selling Dollar General at a loss. Okay? You are just playing into how the market plays. Okay? If you get into a trading mindset, you would have cut your losses out so much quicker. Okay? You would have had $150 average. Say you had a $180 average price of Dollar General, and you would have been buying it of it the belief to go lower, and you would have seen this little we can make a little line here to make it a little smoother. Okay, so you would have seen this little generic trend you would have had here. Okay, there you go. You would have seen that little trend you had there, and you could have just drawn a basic trend line for yourself to just tell yourself, well, if it breaks below that, okay, let me go ahead and get out because it's broken the trend. It's the chart and the prices are telling me it's going to go lower. So right now, as we were saying as I was mentioning in a video, last time I was talking about talking about Dollar General, $70 is a great price to buy, personally, myself, for a long-term investment. And right now it's behaving very nicely. It's on the up and up. It's looking good. Sure, I expect price to go lower. I always expect price to go against me. But just because I have a little position in Dollar General already at $76 is my actual average price at the moment, I still expect it to go a little lower. There's nothing wrong with it making a little dip and taking out some liquidity here at 66, maybe coming down to 55. I'll buy more, but don't kick yourself because, oh, well, I sold at 72 when it at the absolute bottom, and now it's gone up to 84, and maybe it's going to go back up to 150 right now. If it does, oh well. Okay, lesson learned. So that's just what I feel on Dollar General at the moment. I was going to look at looking at Five Below. Now see, this is the opposite example. Five Below, it's still holding the area that I'm interested in. So long as it's holding this $65 to $90 range, I'm comfortable, okay? Because we had an average of like 72 on this thing. So Dollar General, not Dollar General, Five Below, it's just consolidating in this area. It's no problem. Sure, when you buy something for $72, you want it to immediately rip up, okay? It's gonna take time. It's gonna take time to see that move. You have to be patient in the market. I'm still of the conviction on Five Below making a gorgeous move because honestly, it's not, triangular patterns aren't like do or die. But if you're a pattern person, if you hold a lot of weight to patterns, you're still inside this triangular pattern, and you're still at the bottom of this triangular pattern. Until we break below like $64, okay, we're still holding within this generically drawn triangular pattern. So if I'm riding along the bottom of a triangular pattern, okay, if I'm riding along the bottom of a triangular pattern, I'm of the belief and of the experience of witnessing it break up to, at the very least, test the top of the triangular pattern, okay? That's kind of how price tends to play out, which is right here about 160. So that's why Five Below is still a, buy and hold DCA type of stock for me personally at the moment. Never do what I say. This is never financial advice. I just share on a basis of how I view the markets and, my perception on things to kind of open up people's minds. Number one, give people a good laugh at me and how I do. But number two, also open up some people's minds on thinking, you can make, solid decisions that can protect yourself. Like the Dollar General idea. As an investor on Dollar General, okay, as an investor on Dollar General, you got burned because the investor mindset is always, I'm coming back to Dollar General real quick. This is a good point. Why did people lose on Dollar General so bad? Because they simply have the investor mindset of buy and hold forever. Okay? That's why learning to be a trader can protect yourself on your investments, because you're investing in Dollar General. But as a trader, you can see, hey, we're kind of high right now. Oh, we kind of broke this trend line here. Ooh, that's not looking good. A lot of indicators are pointing to the down at the moment. Let me go ahead and protect myself and get out at 150, 140, okay, and protect some of my capital. But that's only if you have a trader's mindset on top of being an investor. If you're just an investor, you're going to hold it till kingdom come. You're never going to sell. You're going to continually keep buying things at the high end of ranges when all the signs are telling you it's time to have a little cool off. There is no cool off as an investor. So that's kind of like a little message I feel that is like part of the reason why I also got into learning how to become a trader, is because some of my investments, I'd be paying into something for years for it ultimately just to drop down. Like, what the heck? That's the stock market in general. It's the bigger fool theory that they keep playing on everybody. They want you to buy their stock so that they can sell to you. Just remember that every time before you buy something, all you have to tell yourself is, you have to think opposite. Every time you buy, somebody is selling. In order for you to buy, somebody has to sell to you. So when you start off your investments like that, you'll immediately start making better decisions, because you won't buy something at an absolute high. Because when you look at the chart, you'll be like, I'm just buying here, and all these people that bought 2 years ago, they're just selling into me. Okay? So you have to think a little bit differently. Flip your mind when you're buying stocks, if that makes sense. I love everybody. I went on a bit of a rant, and I promised I was going to go over our Aussie dollar trade. That was our best trade so far this year. A little recap. I promise you I will get that to you this week, my friends. I love everybody, and we will talk to everybody later. Peace.